UBC, inspiring Uganda.
Hello, thank you for joining us for yet another episode of the weekly business roundup. My name is Maureen Babidie. These are the highlights. Uganda and Tanzania commit to ease trade between the two nations. Government reaffirms fuel supply despite disruptions along the Strait of Hormuz. National Social Security Fund launches 2-month amnesty campaign targeting swift clearance of employer arrears. Welcome to the program. These are the details. Government has asserted that despite disruptions caused by conflict along the Strait of Hormuz supply route, Uganda remains confident in its partner, Vitol Bahrain, to source fuel products through alternative routes. This is based and included in the Petroleum Supply Amendment Act 2023, where the company signed a 5-year supply agreement with government, appointing it as sole supplier of refined petroleum products. Take a look.
There is growing speculation over potential fuel supply shortages due to the developments in the Middle East. But government has assured the public that there will be sufficient fuel products to meet the country's demand.
With our Jinja storage terminal, which is a 30 million litre capacity terminal, we have other avenues for bringing in this fuel despite the terminal, but also we have private investors who have bigger terminals than the Jinja storage terminal, like Mahati, that are supporting with making sure that we have enough stock in the country.
Global markets are closely watching developments in the Gulf region, which also raises questions about Uganda's dependence on routes linked to the Strait of Hormuz.
So we've not only been relying on the Middle East, and with our partner Vitol, who's an international partner, we've been sourcing from different markets around the world. So India, Singapore are those immediate ones, but of course the Americas also provide an option. And whether this will impact on the pricing, that I can't say for certain right now, because it's a global conversation. All of these are, trends within the markets, and if you've been following the market trends, you can see some bit of fluctuation in pricing. So I can't speak certainly for that, but what I know is that the markets are available, or where we can get this product are available to be able to sustain the demand in the country.
Asked whether the current situation would accelerate strategic storage expansion, refinery development, or domestic production timelines, Otoa reiterated government's commitment to strengthen national energy security under existing petroleum supply frameworks.
I think with or without this crisis, we were already accelerating these strategic storage options. Kampala Storage Terminal, which is a 320 million litre capacity terminal, is already underway. We are already doing the early parts of the whole, development of that whole, storage facility. We have the expansion of the Jinja Storage Terminal, adding another 10 million litres. So that already goes to show you that the government, or UNOC, is very keen on making sure that we have these facilities available for us within the next 3 to 4 years to be able to deal with such shocks.
Uganda consumes an average of 7 million litres of fuel per day, imported by the Uganda National Oil Company on behalf of government alongside other private sector stakeholders. Private sector suppliers have been discouraged from hoarding fuel, with authorities warning that such practices could lead to losses, as the government intends to maintain stable and consistent supply across the country. While the Middle East is the dominant source, Vitol Bahrain specifically draws refined petroleum products from several key areas to supply the Ugandan market, that is, including Oman, Saudi Arabia, United Arab Emirates, and from India, Russia, and Libya.
So the contingent arrangement between Vitol and UNOC provide that Vitol, the supplier, has to make sure that they target many sources of petroleum products, such that if one source is gotten affected, then they are able to get fuel from other sources.
As of March 3rd, 2026, the global price for refined gasoline is approximately $2.44 per gallon, which translates to about 2,436 shillings per litre.
We did not commit ourselves in writing, like other countries committing to only one, the supplier that is getting from only one source was dangerous. So the president guided us, and we put it in writing. It's part of the agreement. It's part of the term sheet that UNOC signed with Vitol.
Local fuel marketing companies like petrol stations and other outlets have been cautioned not to hike prices or hoard fuel in a bid to take advantage of the ongoing conflict in the Middle East.
That is satanic, wanting to make obscene profits. You received the products at a certain cost. Why are you hiding it to cause scarcity? We have mandate to cancel you. We can stop dealing with you. We are the only supplier, okay? UNOC is the only supplier.
Uganda's fuel security ultimately depends on the volume of strategic reserves that the country holds against global supply disruptions. In the event of prolonged interruption along key international transit routes, the number of reserve days available would determine how long normal economic activity can be sustained without shortages. Wadulo Arnold Mark at Petroleum House in Entebbe.
Uganda's leading steel manufacturer, Roofing's Rolling Mills, is exploring opportunities to expand its import and export business through the Central Corridor and Port of Dar es Salaam in Tanzania. At a high-level multi-agency meeting in Dar es Salaam, stakeholders from Tanzania's public and private sectors, together with development partners, committed to support Roofing's in strengthening regional trade links for mutual benefit.
6 kilometers.
Top officials from Roofing's Group Uganda have engaged with key players in Tanzania's transport and logistics sector. The discussions in Dar es Salaam focused on harmonizing operational frameworks and increasing the company's utilization of the Central Corridor's multimodal transport network, which connects Uganda to the port of Dar es Salaam through road, rail and lake transport. Roofing's, a leading steel manufacturer in Uganda, is already among the top exporters to Tanzania, currently moving products through the Port Bell, Mwanza lake route.
So we are heavily dependent on logistic infrastructure. We are the major user of Northern Corridor. As the tonnage is going up, we are looking forward for using the Central Corridor.
Now to the final consumer, at the end of the day, we're looking for efficiency. We're looking for cost-effective solutions to make us competitive as a country, not only the final consumer, but also the other manufacturers along the value chain. As we did mention,
the multi-agency meeting held at the Tanzania Ports Authority headquarters brought together stakeholders from government institutions, logistics providers and regional trade agencies. Organized by the Central Corridor Transit Transport Facilitation Agency, CCTTFA, the meeting sought to streamline procedures and facilitate both export and import traffic for Roofing's rolling mills through the Central Corridor and the Port of Dar es Salaam.
Dar es Salaam port should not be skewed to DRC, to Zambia. We want to have an even distribution of our service to all member states. And for Uganda, for sure, you are very close to Tanzania, very close. But the statistics of the Dar es Salaam ports do not support that, isn't it?
The engagements are expected to culminate in the signing of a service agreement with a nominated clearing agent, as well as a service and logistics memorandum of understanding among key service providers along the corridor.
What I know, I noticed that you are able to provide to him all support in order to secure his business, because that's why he traveled from Kampala to here. This is a business that we cannot accept to lose this time.
This commitment is coming at a time when Tanzania is heavily investing in transport and logistics infrastructure, including ports, railways and road networks. Developments that are positioning neighboring countries such as Uganda to benefit from improved regional connectivity.
So what we as private business entities need to do right now is to ensure that we keep the stone rolling after the infrastructures. Now we should be part and parcel of ensuring that there's a seamless flow of cargo between Tanzania and Uganda.
This meeting complements what the government has done and is still doing for the corridor. And we are sure that with time, the business flow, the cargo movement between within this corridor will improve.
Tanzania is currently pursuing its ambition of becoming $1 trillion economy, while Uganda is working toward achieving a $500 billion economy in the near future. For these ambitions to materialize, strong private sector participation and efficient regional trade corridors are becoming increasingly critical. Dennis Igoa for the Business Roundup.
In more news, the National Social Security Fund has launched a 2-month amnesty campaign aimed at encouraging employers with outstanding contributions to clear their arrears as the fund moves to strengthen compliance and grow its asset base.
Officials say that the initiative will improve compliance with the provisions of the National Social Security Fund Act.
So the amnesty campaign will apply to 3 categories of employers. The first category are those who have arrears of contributions. The second category are those who we have audited and we've given them settlement deeds. Then the third category are those employers who are not even registered and they do not have their employees registered for NSSF. We are saying that if you take advantage of this grace period or the amnesty campaign we are giving, we will waive 100% of the penalty.
Under its long-term strategy dubbed Vision 2035, the fund aims to increase its assets under management to 50 trillion shillings, expanding coverage to 50% of Uganda's working population and raise customer satisfaction to 95%. NSSF reports that compliance among registered employers currently stands at about 47%, highlighting gaps in contribution remittances, despite gradual improvements in the recent years.
In sub-Saharan Africa, one of the biggest obstacles to full compliance in social security contribution remains the high level of informality in economies, which continues to limit participation in formal social security systems and affects the broader labor market.
A significant percentage of workers, including those in the formal economy, are informally employed. No appointment letter, no pay slip, okay? So basically you're given a job verbally.
NSSF warns that employers who fail to take advantage of the amnesty period risk legal action, which could lead to additional costs.
We have 2 months, and that takes us through from today. Today is the 10th of March, 2026. 2 months ideally implies we are looking at 11th of May, 2026. I think it's a great time for you to then reach out to the fund. So now then the next big question in the room is how should someone actually assess themselves?
An online portal on NSSF's website has been set up to enable the amnesty process for all categories of employers targeted.
You don't need any logins, you just go to the website and going through the self-assessment portal and download the self-assessment.
The fund, NSSF, maintains that improving compliance and expanding the employer participation will be key in strengthening Uganda's retirement savings systems and securing long-term financial protection for workers. Reporting for UBC News, Wadulo Arnold Mark at Workers' House, Kampala.
The State Minister for Trade, David Bahati, has reiterated government's commitment to supporting local manufacturers through reliable electricity and wider markets. He made the remarks during the 3rd pre-budget breakfast dialogue for the financial year 2026-27, organized by the Uganda Manufacturers Association under the theme Harnessing the NDP4 to combat informality, eliminate illicit trade, and drive tenfold growth. We have the details.
Speaking at the dialogue, David Bahati explained that government is investing about $192 million electricity substations in industrial parks across the country so that industries can access cheaper power in the coming years.
We still are committed to ensuring that all manufacturers get at least 0.5 cents within the medium term.
As of the first quarter of 2025, electricity tariffs for manufacturers in Uganda have been reduced. For 2025, the rates are approximately 355.1 shillings per kilowatt hour for medium industries, 300.4 shillings per kilowatt hour for large industries, and 203.6 per kilowatt hour for extra large industrial consumers.
We are investing around $192 million to develop and support the substations in all industrial parks in Uganda. So power is an issue that we're addressing, and I hope that the Minister of Energy will also be in so that if there are any questions, you ask.
The dialogue also spotlighted other statutory and infrastructural difficulties that keep business costs high for manufacturers and made recommendations to governments as it finalizes with appropriations for the national budget financial year 2026-27 to leverage both national and international trade.
To the second schedule of the VAT Act, and particularly Item 5, which dealt with memorandums and contracts, memorandums of agreements and contracts, which were attracting stamp duty of 15,000 Ugandan shillings per transaction. However, there are other items in that schedule, and particularly Instrument 52, which seeks to which actually levies 15,000 shillings on every receipt of money or property above 50,000. If this is implemented in the state that it is in, it could lead to at a cost. Imagine you only have 50 transactions of sales, e-receipts. This could translate to about 750,000 Ugandan shillings per day.
Haj Sekalala, the chairman of the Uganda Manufacturers Association, also raised an alarming concern, explaining that illegal products in sectors such as alcohol, pharmaceuticals, and cement are affecting profit margins of legitimate businesses and affecting consumers' lives negatively.
Alcohol, nearly 60% of the alcohol sold on the market is illicit. 30% of the pharmaceuticals are illicit. 30% is 1 in 3. So 1 in 3 tablets, if 1 in 3 medicines sold on the market are illicit, this is a big cause for concern, but it is also a big drain on the economy.
As Uganda targets a $500 billion GDP economy, manufacturing is among the government's high priority sectors in NDP4 to drive the country to upper middle income status. It is therefore imperative that the sector operates in a favorable business environment to support the much desired growth. Wadulo Arnold Mark for UBC.
Vivo Energy Uganda recently hosted key stakeholders from Uganda's passenger transport sector for a guided tour of its Kampala depot and tank farm, offering a behind-the-scenes look at the systems that safeguard fuel quality and reliability before products reach the market.
This engagement brought together leaders from the Federation of the Uganda Taxi Operators and representatives of the border community, media professionals and digital content creators. This tour forms part of the company's broader efforts to strengthen transparency around its operations and demonstrate the process that underpin the Shell brand's performance promise. Participants toured the 2 fuel depots, the LPG filling plant, and the product quality laboratory, where they observed how fuels and lubricants are received, tested, stored, and dispatched before distribution across the country.
We wanted to see the oil that we consume, how it is purified up to the time we use it. but we've discovered that we are misled. We are using some wrong oil in our motor vehicles.
So today we've demonstrated how we deal with our fuel and the quality and what we do to protect the quality. So they now understand that the fuel is not the same everywhere, number one. Number two, they've seen how we store and how we process gas as well. And they now understand how to tell bad fuel from good fuel. They understand how to tell good gas and where to buy it from. So we've taken through the whole process to give them comfort as consumers in terms of what we do.
The facility operates a multi-stage quality assurance process in which every batch of product undergoes sampling and laboratory testing before it is cleared for delivery to customers.
In another development, Uganda and Tanzania have committed to removing all trade barriers between the two countries and set a timeline of June this year. The commitment was announced during the closing ceremony of the 5th session of the Joint Permanent Commission in Dar es Salaam. At the closing ceremony, a memorandum of understanding for the construction of a standard gauge railway line between Tanzania and Uganda was signed.
The two sides met at technical level and highlighted the non-tariff and trade barriers that have existed for a long time. They have almost become a cancer. So at the meeting of these technical officials, each country, each member state raised what they felt were trade and non-tariff barriers from either side. So they raised them to the ministers. So at the meeting of ministers this morning, we have agreed on two fundamental issues. Number one, to fully implement the Customs Union Protocol. I'm giving you a summary. And secondly, to fully, without any contradiction, implement the Common Market Protocol. And that we shall be doing it in fulfillment of the requirement of Article 32 to the Treaty of the East African Community. So we have agreed to remove, there are those who are going to remove immediately, the levy on sugar, levy on milk, levy on steel products. That should be sorted immediately. The others, however, which are enshrined in the policy formulation of both countries, which have agreed they must all, and we are meaning all, cease or be vacated by 30th June 2026. So therefore, to Ugandans watching us at home, we have good news from this JPC.
Technical bureaucrats, this is the spirit our leaders have. It's a very positive spirit of cooperation. So please make our jobs very easy. Don't complicate it. Don't complicate it with clear demarcation line, fine line, I don't know, hairline. Everything should be very, very, very clear. Cooperation that does not solely lie in our jointly agreeing on programs and projects, but working on them together towards successful target. It lies in the execution. That's why I thank very much Minister Wanini. Inachi? Everywhere you reminded us together with the other minister, timelines. Nakushukuruni sana Mheshimiwa Mawaziri for that reminder. Implementation, monitoring is very important.
We have signed an MOU specifically to commit ourselves on the development of the standard gauge rail line, which is connecting Tanzania and Uganda. That is through Ishaka, going through Mirongo, it goes through Chikagate, and it proceeds to Mpondwe, to Uganda. You know, the East African community took a joint initiative to develop the standard gauge railway. And the problem we have with East Africa, it is the high cost of commodities. The high cost of commodities, it is because of the high cost of transportation of these commodities. When we get these goods, we transport them by road. Of course, we pay highly and heavily. And in turn, the high cost of transportation of these goods, the cargo, you see the commodities we buy at high prices. So the only way is to go rail transport. Rail transport is very cheap, especially the standard gauge rail. It is very faster in terms of movement. It can transport heavy cargo in the shortest time possible. because it is electrical.
The bell-ringing ceremony at the Nairobi Securities Exchange has marked a historic milestone as Kenya Pipeline Company officially commenced trading on the exchange following a successful initial public offering. The ceremony was officiated by the President of Kenya, William Ruto.
And today has been the remarkable event of the bell ringing, which marks the trading initiation on the Nairobi Securities Exchange.
The event in Nairobi, graced by His Excellency William Ruto, the President of Kenya, signaled the start of public trading of Kenya Pipeline Company shares.
Ladies and gentlemen, the Kenya Pipeline Company IPO is the first privatization listing in nearly 2 decades at this bourse. The previous one being Safaricom, which was listed in June 2008. But there is a deeper significance to today's listing.
It has been announced that the government of Uganda had acquired a 20.15% shareholding in KPC, highlighting Uganda's commitment to strengthen regional energy security and strategic infrastructure partnerships.
So we look forward to participating as shareholders in KPC. We are going to look at their strategy. We are going to be part of the conversation in the boardroom and be part of the decision-making process. So it's exciting times, and I want to congratulate everyone who has been part of this achievement.
The KPC initial public offering raised more than 106 billion Kenyan shillings.
Unlike previous privatization proceeds that were absorbed into the general government budget, the proceeds of this IPO, as well as future privatization, will provide capital to the National Infrastructure Fund, which I signed into law yesterday on Monday, February 9th, 2026.
Currently, Uganda imports about 95% of petroleum products through Kenya, amounting to 2.96 billion litres per annum.
There is a travel advisory by the Japanese government not to travel to certain destinations, especially Queen Elizabeth, because of the incident that happened 3 years ago. When there was an incident that we lost some tourists in there, but the situation has since stabilized. Other countries like even UK have lifted that travel ban, but the Japanese government is still holding that travel advisory level, and it is really limiting us in terms of what tour packages we can be able to create. For example, if we approach the big Japanese travel agents, we cannot be able to include in the itinerary a visit to Queen Elizabeth and Bwindi for gorillas, which is our main attraction. So we are missing out on that.
As we wrap up this week, it's easy to get caught up in the ticker symbols, the quarterly reports, and the breaking news. But beneath all the data, there's something more enduring: the people doing the work. Behind every corporate announcement, there's a team of people who showed up, tried their best, and are trying to figure it out as they go, just like the rest of us. I hope this week you take a moment to zoom out. Remember that business at its core is about serving others and building something that lasts. Thank you so much for your time. My name is Maureen Babidie. Goodbye.
UBC, inspiring Uganda.